Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Wednesday, June 3rd, 2020. I'm going to try to cover a lot, but I'll go quickly through each security. And what I'm going to do is, as usual, quick update on the broad market. Not going to spend a lot of time there because it's just doing its thing, grinding higher, defying divergences. So we'll spend just a couple minutes there. And then hit on everything that I've highlighted just in the last couple days here as trade ideas, and that is still watching the US dollar, the euro, and going through these in this order. Then we'll roll into silver and gold. I do want to make mention about treasury bonds. That's the first significant technical development today in quite a while. So I'll just point that out. And some of the commodities that I've highlighted recently is looking like some of the more attractive long side opportunities. And then finally, just the trade ideas that I covered yesterday, a handful of trade ideas. So we're going to go through in that order. Let's start out with the stock market. Again, not much else to add. Continues to diverge and defy those divergences. In other words, every divergent high has a little correction followed by another push up. So that's the trend. Really no big sell, well, not really any sell signals at all right now. We did break down the other day from this minor trend line, but it didn't result in much. We've been back testing it. So like I said this morning, we need to take out that trend line there. I want to get to IWM here in a second. Before I do that, QQQ. Same story. QQQ and the FANG stocks are still all above. I colored these blue trend lines on QQQ and the FANGs, and they're all still, well, I should say most are above trend. We need to see the majority of those break down. So nothing really very significant. There's a little minor trend line you can watch. I do think that would trigger the next pullback break at that level there, especially if you get something comparable in SPY, and we'll look at the futures in a second. IWM. That is an active trade, so I want to talk on that one. We're back to, let's see, which board did we use? I think this one was entered on the daily chart. Well, let's just go to the daily chart here. The basis for the IWM trade the other day, and I still maintain it, a very, very solid and significant technical level, resistance level. This purple or magenta line at about, give or take, about 145. That was a basis for the short. Actually, we had a rejection off there, and that's then we shorted that, and that gave us a bearish engulfing candle, gave us a breakdown of this wedge, and then a confirming red candle the day after we had the bearish engulfing off there. So what happened today is we made another run at the high. Now, where normally I might say, well, this is the same basis for shorting the trade back then holds true today, and that is true. The fact that 145 is resistance, so I will say this is objective to add on or short. What I don't like about it is it sort of negated the bearish potential for that candlestick here. Now, bearish engulfing candlestick, you look for those after an extended uptrend is a topping stick. And you had a confirming red candle, but now we've moved back and even took it out intra-period, closed right at about where that high of that candle was. And again, all in all, that's certainly doesn't help the bearish case. Again, support, I would put a much higher weighting on support than any candlestick. You get bearish engulfing candles, they come along during uptrends, and they're not the highest probability reversal, but like I say, if you get red follow-up, especially a couple red candles, and the redder the better afterwards, meaning big red impulsive candles, that's great. But what happened after that when we pulled back to that 135.83 support? So we'll watch it. Well, pretty much this is where it should stop. If it goes much above 145, and with this market, it seems to just be driven by Fed liquidity and measures and excitement about the economy coming back online. But let's just not forget the bigger picture on IWM, and the short on that one recently, as I said, wasn't solely because we ran into resistance on the daily, or solely because we put in a bearish engulfing candle. IWM, unlike the large caps, these are the small caps. They peaked back here a while ago, all the way back in 2018. That was the high in the small caps and the mid caps, and really it's just been the big mega fangs, mega large caps are the fangs: Facebook, Amazon, Apple, Alphabet, and Microsoft. They've been to a large extent driving the market higher, or they did from 2018. So again, I just wanted to kind of point out the bigger picture. I have dual trend lines here on IWM. Both have quite a few reactions, and that's it. We're back testing those. Trend indicators remain clearly in bearish territory, meaning it's below the PPO 90 EMA is below the signal line. So that's it. So we have near term and even intermediate term, unarguably a bullish trend. However, that bullish trend, that's been quite a rally to take us back into significant resistance. Again, about 144, 145. I had it on the daily chart right there. You can see that it's a big level, and you have these intersecting trend lines as well. You have the 40-week moving average. Just a whole confluence of resistance. So I'm still comfortable with this short trade. I want to say that I'm not going to revise any of the official criteria. I know right now it looks like the market will never go down, and we know that's not true. It's just a matter of how much more is it going to go before a decent correction. Decent meaning 5-10% plus, and quite possibly a whole lot more than that. That's one thing I promise you, is that the more powerful, if this is a bear market rally, it convinces the masses that it can't be anything less than the road to new highs. And so far, IWM has a lot of work to do that. That would be another almost 20% to get back to, well, to take out the all-time highs. Yeah, over 21%. The all-time highs are back here. So let's move on. I probably spent more time there than I should have, but a lot of people watch that. No change from the last update. NQ continues to diverge, just like ES. There it is. Again, first divergent high since back here in late May, right there, and that one was followed by a decent, certainly a tradable drop. Previous divergent high, and then the one before that. So that's where we're at. Just need to see, roll over. What would probably get some selling going here? I think if I put a line right here, let's go a horizontal line, put it right about there. You have all this confluence of candlesticks right here. We've been bouncing above about 96.50 or so right there, and that would most likely trigger another drop. And remember, the way it usually works, not always, but small divergences. This was a divergent high right here, and we had a little correction. Now that was for the divergence there. That divergence is extensive. So typically, you get you get smaller divergences. The bigger the divergences become, the bigger the drop. Okay, this small divergence, we had divergence here, we had it here, little drop, a little bit bigger divergence, finally a much bigger drop. So keep that in mind. All right, next up would be, probably should hit on RTY, small cap futures, right here. Same story, big old divergences, building, and so far little kind of just nothing more than little shots across the bow there. First divergent high, little correction. Second divergent high, a little bit bigger correction. Third, still all part of the same divergence, maybe even a bigger correction, and that would be a break of this trend line here. Would most likely trigger that. Where do we go from there? Well, since this was the last correction down there, we never hit. This is a target, and I still, maintain that target about 1335. What would that be in the RTY small cap futures? About 6.5%. Could certainly morph into something more because of everything I just talked about a minute ago on the daily and weekly charts. Let's not forget that, the bigger picture, where we're at, because sometimes it's easy to get caught up in the world of these 60-minute charts, and then you come used to, trading. Well, okay, well, I got it. It's in an uptrend. You can hit and run on these small pullbacks. But then sooner or later, especially if it aligns with more bearish developments on the daily chart, one of these, seemingly, minor breakdowns may trigger the start of a much larger one. All right, moving on. Euro US dollar. Let me just say, since I've done extensive coverage on this lately, no breakdown yet. There's a euro still wedging up. Another, still making divergent high right there. Negative divergence. Needs to take out this trend line right here, and then we have this one below there as well, and that will help. So that would be a sell signal. I think that would do the trick. I think if you're looking to get short the euro, or to maybe add to or manage your any short position on silver or crude oil, some of the things I mentioned. Of course, they have their own technicals you need to follow. I think this one will do the trick, and I think that will be pretty much a nail in the coffin and give us a trend change there in the euro. And then the US dollar, which is DX, pretty much the euro in reverse. You need to break out the minor trend line I showed you this morning, and then this secondary trend line there, and this is still the target up here. Let me give you a level. I keep talking about that level right there, that solid white horizontal line. Let me put a number to it for you dollar future traders. That's 98.71 or so. Okay, and that brings me to silver, which is one reason I'm watching the dollar closely. Just kind of get more bang for your buck in silver. Since silver broke down right here, it fell, hit my first target this morning. That was covered when I was doing the video earlier today. We were on or just hit that second target, which I said is support, and we got a bounce. We had the typical reaction. That's about a 5.65% drop down to that target just in a day. Not bad. Certainly more than the stock market's going up. Some like always focus on the most bearish looking patterns for shorting and the most bullish looking patterns for going long. Sometimes the broad market's very conducive to trading. It is going up. But it's just not, I don't see objective entries. You can buy every dip. That's been working. It's just not my style. I don't see objective long entries, and I don't think the risk reward is favorable, so I'll continue to focus elsewhere, as I think there's better fish to fry. Again, of course, other than the IWM, which is an active trade. This one, again, we had a bounce off the 1790, 996 first target right here. There's your initial reaction. We bounced there, and you can see what we did so far. Here, let me tighten it up for you. What's happened is we don't have the dollar breaking out yet or the euro breaking down, so that's going to, it doesn't mean this trade can't continue to play out. It certainly doesn't. It just would certainly help if the dollar does break out of those levels I just showed you. So what I can say right now is this is an objective level to short, because this was a bounce off, which is typically the case. The initial tag of these support levels I list, the targets, is where you're likely to get a reaction just on the initial, the first tag from above. And this one we bounce back to resistance, because remember, this former support, once broken, becomes resistance, and that's that. And we have the early makings of a downtrend. We'll see how that continues. Downtrend simply being a series of lower highs and lower lows, which is what this is so far. So that's a near-term downtrend right now, and I'm still eyeing at least this level right here. And depending on what the dollar does, may extend those targets. But as of now, that's what I'm looking for. PPO is kind of buried down there, getting quite a bit oversold, but we have a little RSI divergence that should be noted right there, but no PPO divergence. And then gold, I wanted to talk on gold. I shared my thoughts on this recently. I don't have as strong convictions on gold. I think there's a little more meat on the bone for silver short. However, gold is at that bottom of the trading range. What stood out to me, and what I've said, the reason my convictions aren't high, gold's been grinding sideways since the beginning of April in this trading range. Very, very well defined, numerous reactions on the bottom of the trading range there, and that's where we're at right now. A couple reactions on the top. So there's gold. If the dollar were to break out, remember, we have some bearish divergences on the daily chart of GLD or GC. You can look at gold futures, but GLD shows pretty well. This is the daily chart. And no, this is a weekly chart. We even have the divergences all the way out on the weekly chart. I happen to just flip over. I had it on my chart set already to the weekly. So this has to be respected. I've been bullish for gold, on gold for a long time. It's still a long-term trade. We've hit, I think, 3 of the 4 price targets on that long-term trade. But this is something that needs to be respected. This is a pretty big divergence here. And you can see it on the daily chart as well, divergent high. So whereas I showed you gold futures are right at support, we're pretty much there as well, or just a hair above it on GLD, the ETF. That's 158, pretty good level. We had a couple reaction highs there, rejected both times, finally broke above it, tested, and still above it. So that's a pretty big level. Whereas if we break a solid break below that level, especially considering these divergences, that's not going to be good. These divergences are the type that I could see us, they're kind of flat. They're not really clean separation like this between the lines right there and there. So it's still very possible, and the trend is bullish. The overall trend is still bullish, primary uptrend. And so gold could hold that level, and it could even have a little fake down move and run up there. So I just want to say, where am I going with this? I'm not so keen. I'm still watching gold as far as an active trade. I don't have a position in my active trading account. I'm just watching it right now. I wanted to point those levels out because you could use that to manage a stop, in a long position. You could also keep an eye out for maybe a false breakdown, a whipsaw, and jump in if it can regain that level, things like that. All right, I probably spent more time on gold than I should have. Silver, same thing. You already know my thoughts. Have been really hyper focused on those futures more so than the but we do have support here, 1633, and same thing on that. What was it? DSL or no ZSL? Yeah, that's the proxy. Since of course you could short SLV. But remember, at the same time when I was doing the video today that silver was at support, silver futures, this one, the inverse, the short, 2 times short, was at this 2150 level, which I said would be comparable resistance, and so we need to take that out. So those are your levels you need to see go. Get that white line right here, the dash line, the PPO signal line. If it crosses up above the 0 line, that's usually bullish, denotes a bullish trend. It does a pretty good job on a lot of securities when that white line is above, like it is right here, above the dashed line here and the 0 line. The trend is bullish, and you want to be long. When it crosses below, that says get out and stay out until that line crosses. There was a little whipsaw there, but for the most part, it said, look. And I always say this too, when things start flattening out, you're in a trading range right here. So at the very least, this is when you were clearly below. You had a little back test there. And that's the other thing. That line often works as support and resistance. I'm talking about the 0 line when tested from above or below. So we have to keep that in mind. We have the bullish divergence, so I do favor a breakout, but as of now we don't. So in a couple days, if we do see this line go above there, what's going to cause that, of course, is rallying up to that next target about 2305. That will help support the case that we've seen likely seen a pretty significant, at least a near-term trend change in silver instead of just a little pullback along the way in an uptrend. Okay, next up would be Treasury bonds. I want to talk on that. I've been watching, and I don't post much. I kind of want to say that. Sometimes I get comments, hey Randy, can you post daily updates on gold, Bitcoin? There's I follow. I'm always moving around. There's core things I follow, like the stock market, currencies, gold, commodities, crude oil, things like that. And then as far as sectors go, individual stocks, if you followed me for a while, one day I'm talking about pot stocks over and over, and the next day I'm talking about corn or Bitcoin or government bonds. I just want to say that I watch. I'm not going to report on each and everything every day. We do 2-hour videos a night, if that, maybe more. But what I've been watching on Treasury bonds is this right here. This is ZB, and we were just on TLT. I'll get back to that, but the futures are really what most of the pros are trading and watching. And ZB is the long bond. You have UB, the ultra bond, which is the longest, 30-year. These are the long run range, like 25 to maybe 28-year bonds, in there. So pretty much the long bond as well, close to 30-year. Point is, we've been since the meltdown back into the lows in March, we've been locked in a trading range. And this concerns me with Treasury bonds, and I've also stayed away from them for a while. And same with the stock market. We don't have the single most important factor in the stock market and the bond market is gone for good now. We've never seen this. That's price discovery. Price discovery is the natural interaction of buyers and sellers. Determining where a price should be, kind of giving you clues. That's why technical analysis. That's probably why I'm having a heck of a time with the indexes lately, because the Fed has stepped in magnitudes of order larger than they did back in 2008. They've already vastly exceeded, I think, by 8 times the total amount of quantitative easing or support. I saw some the headline today of up to this point, just since this thing started a couple months ago. I think it's 8 times more than what they did in the entire year of 2008. So it's massive. And one of the things they're sporting and playing around with are the treasury bonds. So 30-year bond, in other words, where I'm going with this, has been locked in this range. But I wanted to point out today that we broke down. Now, not a very impulsive breakdown, so I'm not going to take too much of it right now, but something worth monitoring, because if we continue lower, that is a well-defined price channel right there, trading range, and it could have longer-term implications. TLT, you can actually see it a little more clear. ZB was down 0.88%. TLT was down 1.33%. TLT is the long-term 20 to 30-year bonds ETF, and you can see I had this support level here for a long time, 162.57 or so, and that's a level that treasuries have been holding above, and finally they gave it up. So again, this was that everything going wonky back in the February highs and stock market to the March lows, and the recovery there, and pretty solid breakdown here on TLT. So I'll just say it. You can't chalk that up as to anything but bearish. I'm sorry, for now. That is a sell signal. Am I shorting treasuries? No, for the reasons I said. The Fed's really in control there. They come in and do what they want, but it might have implications on the market. Bonds always have. Professional traders watch the bond market for clues on the stock markets. I mean, the credit markets are really everything. They're intertwined. I'm not going to say it's more important than the stock market, but it's much larger than the stock market. And this stock market, we're up to where we're at. Where the stock market, especially since 2008, has gone. It's all about credit that has driven this market higher. The cheap credit, widely accessible credit. And of course, this saved the day from the Fed right here when they came in and pretty much backstopped the credit markets, is why they saved the stock market. So it's more about them backstopping the credit markets that was the catalyst for this rally than anything they did, as far as buying stocks or giving the big banks money to buy stocks with. I just want to say that. So I'll watch these. Is there a trade? Again, I told you why I'm not, but maybe. I don't see support all the way down here for a while, so treasuries could drop quite a bit. Just wanted to point that out. And here's a long-term chart, a weekly chart. This would be the target right here, and it's a significant drop for treasury bonds. Remember, they don't move up and down as much as stocks. So about 149, you have a intersecting price support, as well as that uptrend line support, and that's about 7% below current levels. So something to watch right there. All right, let's move on and get into commodities. Not going to go through them all. Like I said, I wanted to kind of hit on what stands out today. The ones that I liked recently were sugar. I mentioned SGG continues to climb. After the breakout in the bullish falling wedge pattern here, it's been moving up, stepping higher, and made a new high today, keeping this uptrend intact right here. So since the breakout, we have a confirmed uptrend. That was the former on the last trade, the first target, which was hit quickly back then, and we're above that level now, and that opens the door for this next target up here, 40.47. Not an official trade right now, so that means that I just didn't do an adjustment. If you're targeting that level, you want to sell a little bit below. But ultimately, I think there's a possibility here we can, we're in the early stages of maybe some longer-term trends, bullish trends. So you could have either a long-term swing trade or we call it a trend trade, and just kind of, tuck some positions away and hold on to them. That's what I'm doing in some of my longer-term accounts for diversification. Having some commodities in there like these. Cane, I mentioned that. This is just a different company's sugar ETN, and Cane broke out. We had this inverse head and shoulders pattern I mentioned recently. Those are bottoming patterns: left shoulder, head, right shoulder. This is your neckline right there. A breakout the other day, and nice follow through today, up another 3%. So nothing to write home about, but steady Eddie wins the race. And a couple more, and then we'll move on. JJG of the grains. This is a grain ETN, has corn, soybeans, and wheat. So one size fits all if you don't want to trade each of those individually. Poised to break out, but hasn't done so yet. Almost close to breaking out right on the top of this bullish falling wedge pattern right here. Wash, rinse, repeat stuff. Nothing's guaranteed, but Last time we had a similar pattern here, bullish falling wedge with positive divergence on your indicators, or right here and here. That led to this rally. This one led to this rally, and I think this one will lead to this rally and possibly more. Alrighty, coffee, J-O. Joe, told you I like it quite a bit. More so, I took some time out and left my desk today. I'm just doing some errands. It's not the market. It's not that conducive to trading, so I'm not actively trading lately. And I may do that again tomorrow. So had I been here, I would have added this one. I mentioned it the other day. But again, official trade, unofficial, tell you what I like. And sometimes it's just a matter of me. I'm still behind on the official trades. There's so many that need to be, to post an update saying how much it was stopped out for or how much a price target was hit, and then move it, move those into the completed trade categories. But again, the case was made. Oh, and I want to talk about this. If you're new to the site, or even if you're not, reference the previous notes. If you're interested in coffee, you go down here and below any post you have these symbol tags, and you can click on, for example, if you click JO, which is the coffee ETN, or you can click $COFFEE, which is our coffee futures. I'll post both. Click either one, and it's going to take you and load all posts on the site in chronological order that have covered coffee. So if you want to say, if I'm just kind of breezing over this chart right now, you want to go into a little more in depth, you can see these posts. Some of these are videos, some might have screenshots, chart images, and you can catch up there. I just wanted to mention that. But on that, on coffee, I paused the video there by mistake. It's a wash, rinse, repeat thing. You buy it down here, buy it at this $30, 30.68 level on pullbacks, especially when you have bullish divergences in place like you did here, 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 and here, like we do now. And boom, 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 boom. So that's it. And of course, stop a little below, and I pointed this out. We had that little whipsaw there, that false breakdown, and the fact we recovered it and we're starting to move up is so far bullish. So I think it is an objective long here. It's still very close to that level, and we'll stop somewhat below, maybe below those recent lows. And that's about it. DBA needs to get a little breakout. I've told you this box right here, this recent trading range, we need to clear that, but it looks good. The chart's constructive. I like that one as well. Soybeans broke out the other day, and they're moving up today. Here's the downtrend line. So we had a breakout at that one little whipsaw there, and some follow through today to yesterday's green candle. So it's not on fire. It's only up 0.5% today, but again, if you're looking for ideas, ways to diversify other things in there, these are a few of those. And I think that is it for the commodities. Okay, and then just keeping with on my theme of just covering the trade ideas I've focused recently, all the ones I covered last night in the same order. That was starting with Reed. That was objective long and a breakout here. We are at this resistance zone 83 to 89. I said if it recovered the $1 level, that's also bullish. Single day, you're good for 40%. I already covered this morning. I think it could continue up, but we had another chance. It would close right on there, exactly on that target. We hit it earlier today. Right there in the morning, 117. You had a chance to exit, hit it again. We closed on it. So you've had multiple chances to exit, or at least to raise your stop if you're holding out for additional gains. But that's a pretty significant resistance. That's all I was looking for. So quick 40%, take the money and run would be my suggestion, or at very least raise your stops if you're going to hold on and for additional gains. SNES was not a buy signal. We don't have a breakout yet. We need to break that line, so nothing to report there. LTM, that one did follow through and entered the gap, backfilled about 2/3 of the gap. At one point it was also up about 30% or so today. So there's another one there that played out. So just showing you how these individual stocks usually have more bang for your buck. No breakout yet on CAN. We need to take out the trend line. That one was mentioned yesterday. I also mentioned Seed. Seed did break out. It said it would be an objective long entry on a break above this downtrend line. So there's your green candle. Pretty impulsive. Volumes, oh yeah, volume's good. that's okay volume. You want to see an increased volume on a breakout to help confirm it. Up 9.28% today. At the close, it was up higher intraday, so looks good now. And DS had earlier today, it had some follow through to the bull flag breakout, but kind of got sold into. Not ideally what you want to see. You want to see impulsive buying continue on once you break out of a bull flag. So on that one, probably best if you're in it to just tighten up stops and not give it a lot more room. Otherwise, it's that's going to be a little whipsaw signal there. And the other ones I covered were some of the ag ETFs. We had MBII. Right there, yet to break out, needs to take out that downtrend line to trigger a buy signal. Again, you can check click on the ticker symbol if you want to see the previous video or coverage of these stocks. NTR, a breakout, but not very impulsively. It was up today, cleared that 37 level. So it's into the gap, and that increases the odds of a gap backfill. That would be next target there, about 38.54. Next, I covered FMC. Now, the reason I highlighted these ag input stocks is because almost all of them are bullish, and I'm seeing a lot of momentum. Now, this one I said, if anything, maybe a short. It was up about 1% today. I wouldn't short it unless it takes out, and I think that's what I said yesterday. You need to take out this trend line. Although it was at the back testing a little bit above this trend line here. This trend line I'm referring to, the uptrend line. But ideally, you want to see it break down below both of those. And again, right now you have a lot of bullish momentum in the sector, so I tend to not shy away from shorting a single stock in a sector if it has a bearish setup, if the whole sector or the majority of those stocks are bullish, set up with bullish chart patterns, recently bullish price action like these, moving up on volume. So let's move away from that one. I mentioned Mosaic on a break above 1329. We got that today, so it's up at 8.5%, and there's an objective long entry today, buy signal. CGA I mentioned as a break above this downtrend line. That hasn't happened yet, so no buy signal. And then finally YTN was the other one I mentioned on a break above this downtrend line, and not really. We intraday, but you want to see a solid break, and we close right back on the trend line. Looks constructive, so buy signal still pending. And again, target is all the way up here, about 1090, and that would be about a 60% gain if that is hit. Okay, those are some of the things I'm watching, and we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great evening.